Hello everybody, it's Nick here from the Spartan Trade Academy. Sorry about my voice, it's a little bit weird. In this video I just want to show you and explain to you how to grow a Forex account trading micro lots, and why every trader, especially when he starts out, should trade with small lots first and slowly grow the account. Even if you have a big trading account, or even if you have a lot of money, having a lot of money to spend on a trading account doesn't make you a good trader. It also doesn't ensure that you will make money from the markets just because you have a big account. This is some people get confused. They say, you know what, I have money, I spend like 10,000, 50,000, 100,000, and because of that they will take care of me and they will not play around with me. My broker will not do funny things, so I will surely make money with a little bit of, you know, basic skills. That's not how it works. And because, let me start like this, because when you trade Forex and you have the leverage, it's a lot of it's a mental game. Yeah, your psychology, the way you think, the way you react. It's very crucial to you know, between the difference of winning and losing. So when you get this right, if you get the mindset right, then everything is much easier. But often people think that because they have a big account or they have a lot of money, they can trade immediately with big standard lots, risking a lot of money, and also like not placing any stops, saying, yeah, it will go, it will turn, it will go my way in the end, and then they end up losing money. So just an example, I had a few calls lately from traders that, as I said, didn't have any real skills, only basic skills, and they tried to make money by opening a big account. So there was a guy from Canada who opened a $2 million account, lost it in 3 weeks. Somebody else, again, I think from the USA, $2-3 million account, lost it in a month. Okay, so it doesn't matter if you have a lot of money or not. If you don't have the skills, if you don't know about money management, you cannot make money. You cannot grow the account in this business. You can, maybe you get lucky from time to time, but this is something else. Okay, getting lucky is just happening from time to time, as I said, but over the long run it will destroy you, and not only your account, probably also your confidence in the markets, in trading. So what you want to do, even if you have a big account, or if you have a big account or small account, it doesn't really matter. You have to earn the right to make money from the markets, and you can only do that by starting with small lots, respecting a few cents, a few dollars. And when you learn to respect each dollar, and you follow your trading rules, you follow the money management rules, then you start earning the right to make money from the markets. And the markets, whatever you trade, will reward you when you follow these rules. Yeah, I'm talking about your trading rules, money management rules, the whole attitude you have, okay, and understanding the markets. That's when you get your reward, and that's when the account is growing. And even if you have to spend a lot of money, and this doesn't go only for the guys with a lot of money, even for the people that don't have much money, it's probably even more important. When you open a small account of $200, $300, $400, $1,000 or something like that, you need to grow it very, very carefully, slowly, get the feeling for the markets. Don't be afraid to execute, to place the trades. Yeah, and you cannot do that. You cannot get rid of fear by opening huge lots. Yeah, it will make things worse. It will make things really worse. So to bring it to the point, doesn't matter if you have a big account, if you are rich already, you just want to make more, or if you just start out with a small account, you have to invest only a few bucks first, grow the account by following the rules, money management rules, your system rules, learning from the mistakes. And when you start growing your account by 2, 3%, 5%, 10%, 20%, and you're at the stage where you made like 20, 30%, even if it takes half a year. What is half a year to learn how to make money online trading? It's nothing really, right? So you get that right first, and then you start investing more and therefore trading bigger lots. The risk in percentage is always the same. So when you want to be conservative and start risking 1% or 2% at some point, okay, after you grow your account, it's always the same. 2% of $1,000 or 2% of $10,000 or $100,000. It's about percentage in the end. Okay, so you have to get this right, and that's why you have to trade micro lots and earn the right to make money from the markets first. And I have a really good example here. This is one of our small live accounts. This is one of my accounts actually, and I let some members of us trade these or this particular account for example with micro lots. And those are people that, for instance, don't have a real account yet, or they're starting out, or they want to learn how to manage funds, so they need to adopt the right mindset. And when I say, okay, trade on my account, use micro lots, small lots, really tiny lots, to steady and slowly grow the account. And if you do that, then it doesn't really matter what amount we put into this account. If you just follow the rules, and you can grow the account steady month after month. Okay, there will be months that are better than others, of course, but you have on average in 6 months, in a year, to grow the account steady and risk only a small percentage every time you trade, to protect your account, to protect your investment. Okay, so trading is first about protecting your money, and then about making money. So I give you this example because, as I said, some of our members are trading here, and what they have done, for instance, on this GBP Australian dollar pair, we have a powerful support line. They took a bounce trade according to the Spartan rules. They placed their stop, price moved up, they start trailing the stop, and you can see the price moved up about after the bounce about 700 pips. So this trade is almost with 600 pips in profit. What happened when the price reached an area of resistance and they saw something else was going on? They hedged up the position. This is a strategy we use often to make also profits on the retracement of a trade. It's a little bit complicated. I won't explain that here, but I'm just showing to you what is going on. So we have a long trade, we have a short trade. You only hedge up when you're already in profits, not the other way around. Some people just hedge a position for no reason when they're losing. So this doesn't mean anything. You only hedge a position when you are winning. And you can see there's a nice trade going on here. Euro Australian dollar, we had support, we had a setup against the main trend, a trade at that point, targeting resistance, and they have even higher targets because they probably used a different time frame. Here we have a bounce support on weekly, trying to really make a lot of profits here. But it doesn't matter, we have rules for exits in case it doesn't work out. Australian dollar CHF, a nice setup according to the rules. After retracement, back to resistance, trend line break, main direction is not really short. It's a little bit weird on this pair because of our fake break here, but generally yes, it's moving down. So there are other positions, okay, but you can see these are only micro lots. Let me do it like this. Here you can see it better. 0.01, 0.01, so really small account amounts, and positions running here. You can see the swing trading positions. On this GBP Australian dollar chart, I can click on this. You can see how that looks. Let me check. Sorry. I'll do it on the 1 hourly chart for you. So you'll see the price moved up, up, up. It retraced a little bit and moved down. So there was a hedged position. With other words, this position is locked in with 560 pips profits. You can see that here. There's also the hedged position that made a little bit of profits. You say, hey, this is not money. This is only like what, $70. But these $70, about 900 pips on average, okay? And in percentage, it's huge. So what happens if the price goes back up? You just get rid of the hedged position and keep the long running, which is down here. So you're locking just in your profits in case this is dropping. That's why we hedge. But again, this is a different video. I will paste the link. Actually, click on this link, and you can see the video. It's the video from last year where I explain why we hedge and how we do that. Okay. With other words, again, hedging removes, trading with micro lots removes stress because you don't risk a lot of money. You can focus on your system rules, and when you focus on the system rules and follow the trades and the positions the way you should, then trading can be really, really easy. It does not have to be difficult, okay? And you will always find good setups, new setups to trade. And as I said, when the account is growing by 20, 30, 40, 50%, then you trade bigger lots and you do the same thing, follow the trading plan, create a journal to make sure that you always remember what you did last month, so you can always go back and check your mistakes, and not only the mistakes, also the good stuff, what really worked. Continue do this and grow your account steady. And you cannot imagine how fast you can get then from micro lots to mini lots, from mini lots to standard lots, and then trading or successful trading will be just part of a game, and it will be let's say a habit of yours. Okay, so I wish to you all the best, and make sure you focus on your rules, as I said, and become a really, really powerful trader. That's my wish to all of you, and I hope this video was helpful. If you liked it, I'm uploading this on YouTube, so give it a like below or some comments below, or if you have questions, I'm happy to answer, so I know that these videos are helpful to you, and I will continue creating those. Okay, so have a great day, catch up with you soon, and bye for now.